Welcome back. Well, it's all about new highs in the market right now. Willie Bong has the details. Good to have you, Will. Hope
Hi,
the new
laddie.
high is not getting you high.
Oh, I'm really tipsy right now. I'm just trying to
Okay.
get myself my equilibrium,
Right.
just trying to make sure that I don't fall because
Yeah.
it's like we are hitting that high and possibly will go higher if the investors
With
and market
breakneck
traders,
speed.
will
Right.
just get us there and sustain that trend. That's all we want. The market play out today will definitely determine if we're going to hold on to that high or if it's just a fluke in the market.
All right, we'll see.
Okay, so we just begin with major equities that we track in Africa. They performed mostly positive at intraday. We saw sentiment in that direction. Nigeria's NGX was up at intraday 0.2% and hitting an all-time high of highs, 110,000 points. And this is like high on highs. Laddie's just mentioning that, a bit tipsy about that. Yesterday, the NGX hit a new record high, and this is a consolidation of the gains sustained at the close of the bell. Now, Aradel continues with an upward trajectory from yesterday and has gained about 476 basis points. Okomu oil is currently up to. Activities are still quiet for consumer goods stocks though, but banking is up about 22 basis points, and this was driven by gains in Fidelity Bank, Zenith Bank, Access Holdings, and GTCO. Now, looking at South Africa's JSE, on the flip side, was in the red at intraday, down 0.09%. Elsewhere, we see Egypt's EGX also trading up at intraday, 1.39%. Meanwhile, the Nairobi Securities Exchange closed Tuesday session in the red. Now, to the bond space now. Let's look at how investors' appetite for Nigeria's shorter-term debt, that's the bond market, appears to be fading fast. The latest FGN bond auction that was on Monday saw a dramatic 83% undersubscription for the 5-year paper. Joining us to give us more insights is Chuka Nwachukwu, is the head, chief dealer and group head trading at UBA. Good afternoon, Chuka. It's good to have you on the show.
Good afternoon, Will.
Okay, so Chuka, what's behind this sharp drop in demand for federal government, the 5-year bonds? Is it just about rate expectations now, or are investors signaling deeper concerns around short-term risk and possibly policy direction?
Okay, thank you very much, Will. Basically, investors always look for opportunity, and then why buy a bond of 5 years at 19 levels when you can easily buy a bond of a T-bill or OMO, especially at 24.5 levels. And so it's all about interest. Investors are always looking for opportunities, to take the opportunity. And so I guess that's one of the reasons why
Okay, so we saw also that are you still speaking? Okay. Okay, I just want to know, is this drop for the 5-year paper, does it suggest that investors are not fully convinced of the risk in putting their money in that particular instrument in terms of government-backed payment?
Yeah, so basically, what it meant is that the government itself, is looking to borrow heavily in the fixed income market, and so the interest, especially on the 7-year bond, is as a result of the coupon. The coupon is very attractive. And so most investors obviously will want to play in that field because of the coupon. And then after that, the interest on the 1 year, on the 5 years, like you said, it's quite low based on the fact that 1 year OMO is around 24%. But for the 9-year security bond, especially, the interest is much because of the fact that the yield is attractive. And then, of course, most investors are on the long side of investment.
Why do you think this is? Why are investors leaning more towards the 9-year bond? Because it's a longer term to put one's money to tie it down. The shorter term should give better returns, but why are they leaning towards the 9-year? Is there any particular reason right now?
Yeah, so yeah, so that's the thing. It's all about interest, like I said earlier. The 9 year has a better coupon, and so it's more attractive. And don't forget that most investors are also on long-term investors. Most bond investors are long-term investors. And 33, for example, we all dropped to around 12 levels. So why not lock in now and then reap the benefit within the before the end of the year, which obviously we see downward trend in the yield.
Okay, so looking at, you mentioned the OMO auction, which also took place yesterday. When you compare the rates, it would appear that the DMO, in terms of looking at the bond auction, is being rather conservative with allotments and stop rates here, don't you think?
Absolutely. Yeah, I think that it's what has played out is the part that they obviously don't want higher youth to go for this youth to go higher than this. The reason being that, of course, it means that the government will have to pay more in debt service. And so that's what they are trying to avoid. However, on the OMO side, the CBN, which obviously offers OMO, has other interest, which is obviously trying to attract FPIs to come in. And so they have to make the OMO rate, very attractive for investors to come in and then bring in these much needed dollars.
So how's the liquidity influencing market buy decisions right now? Because obviously today is Children's Day. Our parents buying in the markets based on the market liquidity in the system. Chuka, can you hear me?
Yeah, the liquidity, I mean, as a trader, you know that liquidity is key. Yes, I can hear you. So, like I said, as a trader, liquidity is very key. We saw system liquidity is up about 2 trillion yesterday, and that is why OMO was offered. And so liquidity has actually affected sentiment yesterday in terms of the OMO auction, in terms of the as well as the bond auction. So liquidity will continue to play major role. And so I mean most banks and once liquidity is available, they try to invest in some of these long dated securities. I mean, you will have a yield about 19%, 24% on the OMO side. So it's best to just utilize it and then, make further profits in terms of investment.
Okay, so thank you so much, Chuka, for your time this afternoon. It's beautiful. A shame the internet wouldn't let us have a longer conversation, but we'll definitely continue this to see the direction the federal government goes in terms of borrowing and managing the borrowing cost. Thank you so much, Chuka. Mwachuku is a group head and group head trading at UBA. He's also the chief dealer. Thank you so much.